Let's talk about Maria, fake name. She's a freelance graphic designer. She works from Canada. She loves the idea of living in Florence. She wants to keep on working for her Canadian and American clients. From Italy, she heard about the digital nomad visa. She applied right away. Successfully, she moved to Italy in February. Her first step, and this is a good one, was to register with the Anagrafe in Florence in March. She found a lovely apartment. She got her Italian healthcare card. She felt completely settled. She understood that as an Italian resident now, she wouldn't need to file taxes in Italy. That's the right assumption. Here's where the misunderstanding began. Maria believed that since she registered in March, her tax obligations in Italy would start from that date. She continued to receive payments from her Canadian, American clients into the foreign bank accounts, thinking she only needed to declare her income earned after her registration with the Anagrafe. And her average monthly salary was about $4,000, let's say $48,000 per year. The Agenzia delle Entrate looks at residency in a different way. For tax purposes, Italy operates the calendar year principle. And that means that if you are considered a tax resident for more than 102 days in any given calendar year, from January 1st to December 31st, you're considered a tax resident for the entire year. And this 102 days rule is not based on your Anagrafe registration date only. It also considers where your main center of interest is, where your family lives, where your assets are, and even where you spend most of your physical time. In Maria's case, even though she registered with the Anagrafe in March, the Agenzia delle Entrate could argue that based on how she behaved, because she moved to Italy with the intention of staying, found a permanent home, and she started conducting her main professional activity from here, her center of interest shifted to Italy much earlier, potentially even from January 1st. So what happened now? When Maria filed her first tax return for the following year, declaring income only from March onwards, the Agenzia delle Entrate sent a note. They discovered she'd been in Italy for more than 150 days in the previous year, and she had established her primary residence and work based there. They re-estimated her tax obligations based on her entire income from January 1st. This meant Italy wanted some back taxes. Maria suddenly faced an expected tax bill on income she earned in January and February, approximately, let's say, $8,000, that she had already paid taxes in Canada. And on top of that, she incurred penalties for under-declaring her income, which added another $2,000 in penalties. Her total unexpected cost is around $10,000. A very bad surprise,